Ladies and gentlemen, how you doing? Matthews here from M&F FOREX Traders. I hope you're doing great. All right. If you're new, please subscribe. If you're a returning subscriber, thank you so much for coming back. And let's get started right now. All right. So today I'm going to be doing some uh, trade overview of the trades, some of the trades that we took last week. I'll be looking at specifically two of those trades. One was Euro USD Swiss, and another one was UKO. Okay, so let me just show you right now. So this is what happened on USD Swiss, right? So the market was in a downtrend, as you can see. The market was coming down like this, right? Okay, the market was making higher high, lower lows and lower highs, lower lows and lower highs, right? After that, the market gave us the last lower low, right? And then went up to take out this higher low, right? So once the market does that, we know that the market is due for a what? For a reversal, right? So as smart money traders, what we do is we did try to wait for the market to come back to our level, and the market can come back to our level in different ways, right? So in this particular trade, the market came back to our level in form of a diamond fake out. All right. So those of you who've been with us for a while now, you won't have problems identifying what a diamond setup is, right? If you do have problems, please, there are a lot of videos which we did that actually explain a lot more in detail. So what you can do is you can go to the other videos, or I'll link it down in the description so that you find it easier like that. All right, so this is what happened here. So the market gave us a lower low here, QML lower low, and then higher high. Then market went to the upside, breaking this higher here, this higher low right here. So that's a break of structure. What happened later was the market came in here in form of a fake out right here, which is resistance of support one, which is the first support. This is because you are seeing resistance here because we usually trade a lot of sell setups. All right, you don't usually have a lot of buy setups. So this is S1 and S2 right here. S1 and S2, right? And this, what you're going to actually realize that at this level here, we had something that looked like a QML setup, like a QM setup, right? If you look clear here, we have a low, a high, and a lower low, right? Just like we have on the other side. And the market breaks the structure with nice looking candles. And then the market starts to come back here, resistance, resistance, and then finally it breaks and actually takes out. If you're trying to buy at this level, you'll probably be taken out. This is what happened. The market came to this level, took everyone who was trying to buy at this level, took out all the support and resistance traders, the breakout traders, and then it just nicely gave us a nice pin bar right there and then took off. Okay, so why didn't this QM work? So the reason why it didn't work is because if you look closely right here, you realize that there was this resistance here, had a contact here and almost another one here. All right, so when you have multiple contact like that, it tells us that it's more likely to be used as a stop hand. So price will just come drop a little bit below that resistance and then push the upside. I mean that support or resistance, then push to the upside. That's what usually happens. And in smart money concept, in the Quasimodo strategy, it's what we call a diamond fake out, right? So it will give you something like a QM, but then this QM won't actually work out. The price will come to the QM on the higher time frame and then come to that level, and you can see nicely here. Let me just zoom out a little bit. You can see how accurate this was. The market literally just came to this level here, touched the bit, and then market pushed to the upside by how many pips? I'm looking at this on the 4-hour time frame, by the way. So the market pushed like by about 50 pips, right? 50 pips just after coming to this level and then push like that. And if you look at this, you see our confirmation was a nice pin bar on the 4-hour time frame. Of course, it's going to be different on the higher time, on the lower time frame. See, we had a nice candle here. Let me show you. So here we had some pin bar as well, but that's how it was. The market took off just like that, and it broke up by about 50 pips. All right. So this was very nice, and if you were part of our private community, you'd have benefited in this particular trade. Let me show you what happened. I actually did send this setup. Let me show you right now. I sent this setup before it actually happened. You can see the market had already rejected here, and I told the team to actually buy. And the market was at that level. Stop loss was about how many pips? Let me just check. Stop loss was literally about, it was actually less than 25 pips if you can count with me. So stop loss was literally somewhere around this level, about 20 pips, right? So 20 pips stop loss, and our target was about 20, 230, 260 pips, which is actually very good. So you don't need a lot of these trades to actually make money. You just need 1 or 2 trades like this to work out, and you'll be all right. So this is how it is. So of course, not all setups will work like this one. Not all setups are going to work 100%. All right, that's what you need to understand. And just because the setup looks beautiful doesn't mean that it's going to work out automatically. All right, so you have to actually understand that. If you don't, you actually be putting more risk on every trade with hope that it's going to work out, and then you keep losing money. All right, so talking about not all beautiful trades that work, let me show you another trade that we took, which was UK 100. This was a very nice setup. Let me show you the setup right now. So the market gave us a nice QM here, and the lower low, a low, and the higher high right there, breaking that level there, and then market came down, broke off structure right here. So after that, the market gave us resistance, 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 and another resistance. From that, the market started compressing. As you can see, this was a nice compression, a CP, which in this particular regard, it's actually, you can actually call this a rising wedge. And you and I know that a rising wedge usually breaks down to the lower side, right? Usually we expect the market to break like this. So if you check nicely at this level here, realize that the market almost like dropped here and then pushed to the upside. Unfortunately, we tagged out. The market actually went to the upside and we were taken out. And the stop loss was 15 pips, and my target was about 180. And this is a lot because remember, this is a UK 100. These are very expensive assets, right? So this is what happened. We had a very nice setup, but it didn't work. All right. So just like I always say, you don't know which trade is going to work. So the best thing you can do is control the only thing that you have control over, which is your risk, how much you're actually risking on that particular trade. That's the only thing that you can control. The outcome of a trade, that you can't control. Literally, you can. So that your job should only be being able to actually objectively identify your setups, your edge, and you can do that consistently. Then you know that at the end of the day you're going to have a positive expectancy after a series of trade. All right, so a setup like this will look very beautiful to you. It will look so much appealing, and you think, ah, this one is the one. And then what happens? It takes you out. Like for real, I was so confident about this particular trade. I also sent it to our private community. Okay, this was the trade. The market at that time was actually somewhere around that level. I was anticipating a drop, and the market went to the upside. All right, so these things happen. Okay, so the most important thing is to actually be able to actually take care of your downside. Make sure you have a stop loss in place. It's very important. Make sure your stop loss is there. As a person should actually know before entering into a trade. Know exactly where you are going to be out of the market. Know exactly where your setup is going to be invalidated. That is supposed to know before you even actually are consider taking a trade. All right. So you guys, I hope that you've actually enjoyed this. I know it's short, but I hope you actually find some value in this. If you do, please consider subscribing, like our video, comment in the comment section, share it with your friends. All right. So and that if you want more information, the links down in the description. You can actually communicate with us. We offer mentorship. We also offer signals with setup, as you've seen from our setup. See, we don't just tell you to buy or sell. We show you a setup, and then yeah, all right. And then we also have ebooks that we sell. So please feel free to actually inbox us. All right. Thank you so much for watching, and I really appreciate your support. Until next time, goodbye.